Hello everyone, welcome back. In today's
We're going to focus on the current consolidation phase, where gold has paused after a strong impulse move and is now compressing inside a clearly defined range. This phase is extremely important because the next expansion from this range will define the next major directional move. Let's go straight to the chart and break it down step by step. Before we analyze the consolidation, it's important to understand what created it. Gold previously delivered a strong, impulsive upside move, showing aggressive buying strength. After such moves, the market typically does one of two things: either continues immediately with momentum or pauses to absorb liquidity and rebalance positions. Right now, gold has chosen the second path. This tells us institutions are not exiting, they are repositioning. Current structure: range blocking price. On the 4-hour time frame, price is now clearly boxed inside a range. You can see defined resistance at the top of the range, defined demand support at the bottom, repeated rejections on both sides. This is classic range accumulation behavior, not trend failure. Inside this range, direction is neutral. Outside this range, direction becomes aggressive. Bullish breakout scenario: range high clearance. Let's start with the upside. If price breaks above the top of this consolidation and closes cleanly above the range on the 4H timeframe, that signals acceptance above resistance, fresh liquidity entry, and renewed trend continuation. In that case, we can expect new all-time highs because above this range there is very limited structural resistance. This is where momentum traders step in, after confirmation, not before. Bearish breakdown scenario: range failure. Now let's talk risk. If price breaks below the bottom of this consolidation and closes below the range with strong candles, then the market opens the door for aggressive downside expansion. Below this range, liquidity sits much lower, and the next major downside objective becomes the 4,400 zone. This would not be a small pullback, it would be a range failure move, driven by stop-loss triggering and position unwinding. Why this zone is critical? This consolidation is acting as a decision point. Markets do not stay in compression forever. Once price escapes a range like this, volatility expands fast. That's why trading inside the range carries low probability, while trading the breakout or breakdown carries higher probability. How to approach this market professionally? This is not a market for guessing. The professional approach is stay patient while price remains inside the range. Let the market show direction first. Trade confirmation, not anticipation. Range conditions reward discipline, not activity. Let's summarize clearly. Gold is consolidating after a strong impulse. Price is boxed inside a clean 4H range. Break and close above the range, continuation toward new all-time highs. Break and close below the range, downside expansion toward 4,400. Until a break happens, the market is neutral. This is a wait for expansion environment. If you want to learn how to trade range breakouts, structure, and institutional price behavior with clarity, you can message me directly on Twitter for one-to-one technical and fundamental mentorship. If this update helped you, make sure to like the video, subscribe, and comment below. Do you expect an upside breakout or a downside range failure? Trade safe, stay disciplined, and I'll see you in the next update.